Beyond the noise, find your clarity. This is smart money sense. What if I told you that someone just gained more money in a single day than most countries make in a year? On September 10th, 2025, the financial world witnessed history when Larry Ellison, the 81-year-old co-founder of Oracle, became the richest person in the world overnight. We're not talking about a gradual climb to the top. We're talking about a $101 billion surge in 24 hours that redefined what's possible in modern wealth creation. But here's what most people are missing. This isn't just about one man getting richer. This is a seismic shift that reveals the new power structure of the global economy, and it affects every single one of us. Today, we're going to break down exactly how this happened, why Elon Musk lost his crown, and what this means for your financial future. Before we dive deep, let me put this in perspective. Ellison's $101 billion gain in one day is larger than the entire GDP of countries like Hungary, New Zealand, or Bangladesh. To put that in terms, you can visualize. If you made $1 million every single day, it would take you 276 years to earn what Ellison made in 24 hours. If you want to understand how modern wealth really works and what it means for your investments, hit that subscribe button right now, because we're about to unpack one of the most significant financial events of 2025. So what exactly triggered this historic wealth transfer? The answer lies in three letters: AII, Artificial Intelligence Infrastructure. On September 9th, Oracle released earnings that didn't just beat expectations, they shattered them and rewrote the rules of what's possible in cloud computing. Here's what sent shockwaves through Wall Street. First, Oracle projected that its cloud infrastructure revenue would grow 77% to $18 billion in fiscal 2026. But that was just the beginning. They then dropped a bombshell. Revenues of $32 billion, then $73 billion, then $114 billion, culminating in $144 billion by 2030. That's a seven-fold increase in just 5 years. But projections are one thing. Actual contracts are another. Oracle announced they had signed 4 multi-billion-dollar contracts in just the first quarter, including deals with OpenAI, the company behind ChatGPT, and other AI giants. Their total contract backlog surged to $455 billion, a 359% increase year over year. Why does this matter? Because Oracle isn't just selling cloud services. They're selling the infrastructure that powers the AI revolution. Every time you use ChatGPT, every time a company runs AI analysis, every time artificial intelligence makes a decision, it needs massive computing power. Oracle has positioned itself as the backbone of this new economy. This kind of insight into how modern wealth creation works is exactly what we deliver on Smart Money Sense. If you're finding value in this analysis, make sure you're subscribed and hit that notification bell so you never miss these crucial financial developments that could impact your portfolio. Now, here's where Larry Ellison's story gets truly fascinating. At 81 years old, he owns approximately 41% of Oracle Corporation. This means that when Oracle's stock price jumps 42% in a single day, Ellison's wealth doesn't just grow, it explodes. But this wasn't luck or timing. Ellison has been playing a long game that most people missed. While everyone was focused on the flashy consumer tech companies, Ellison was building the invisible infrastructure that makes everything else possible. Oracle's databases don't make headlines, but they run the world's most critical systems. The company has spent billions building what they call AI factories, massive data centers designed specifically for artificial intelligence workloads. When other companies were chasing social media and consumer apps, Oracle was quietly becoming the foundation that AI companies need to operate. Ellison's 41% ownership stake means he directly benefits from Oracle's success in a way that most CEOs cannot. While Elon Musk owns about 12% of Tesla, Ellison owns more than triple that percentage of Oracle. This ownership concentration is what enabled such massive wealth creation in a single day. But for Ellison to become number one, someone had to fall. And that someone was Elon Musk. The Tesla CEO, who had held the title of world's richest person for approximately 300 days, faced a perfect storm of challenges in 2025. Tesla's stock has been under pressure from multiple angles. First, the elimination of the $7,500 EV tax credit hit demand hard. A Tesla Model Y that effectively cost $37,490 after tax credits now costs the full $44,990, significantly impacting consumer purchasing decisions. Second, Tesla reported disappointing earnings with revenue declining 12% and profits falling 16%. The company's European sales particularly struggled, partly due to increased competition from Chinese manufacturers like BYD, but also due to brand perception issues. Third, Tesla lost its trillion-dollar market capitalization status, a psychological milestone that had symbolized the company's dominance in the EV space. The stock has fluctuated between $209 and $488 over the past 52 weeks, demonstrating extreme volatility that reflects uncertainty about Tesla's future growth trajectory. I want to know what you think about this dramatic shift. Do you believe Oracle's AI infrastructure business is sustainable, or is this another tech bubble? Drop your thoughts in the comments below. I read every single one and often feature the best insights in future videos. This wealth transfer reveals something profound about our modern economy. We're witnessing the rise of what I call infrastructure billionaires, people who own the foundational systems that enable digital transformation. The global cloud AI market was valued at $78.36 billion in 2024 and is projected to reach $589.22 billion by 2032. That's a compound annual growth rate of 28.5%. Oracle's positioning in this market explains why investors are willing to pay premium valuations for the stock. But there's a broader economic story here. Oracle's success is part of a massive shift in global IT spending, which is projected to increase by 9% in 2025, largely fueled by AI and cloud services. This isn't just about one company, it's about a fundamental transformation in how businesses operate. For consumers, this shift means better AI services, more automation, and potentially lower costs as AI infrastructure scales. For companies, it means access to powerful AI capabilities without building their own infrastructure. For investors, it represents both massive opportunities and significant risks. The speed of this wealth creation also highlights growing concerns about wealth inequality. When someone can gain $101 billion in a single day while global poverty persists, it raises important questions about economic distribution and social stability. So, what does this mean for your investment strategy? First, understand that this event validates the critical importance of AI infrastructure. Companies that provide the fundamental building blocks for AI applications are likely to see continued strong demand. However, Oracle's aggressive revenue projections face significant challenges. The company must compete against established hyperscalers like Amazon Web Services, Microsoft Azure, and Google Cloud. These competitors have deeper pockets, broader service offerings, and established customer relationships. Oracle's success will depend on execution. Can they actually deliver the promised revenue growth? Can they build enough infrastructure to meet demand? Can they maintain their competitive advantages as larger players respond? For individual investors, this event demonstrates both the opportunities and risks of concentrated stock ownership. Ellison's massive gain was only possible because of his large ownership stake, but this also means his wealth is highly volatile and dependent on a single company's performance. If this analysis is helping you understand these complex market dynamics, show your support by hitting that like button. It helps other people discover this content and tells YouTube that you want more in-depth financial analysis like this. The Oracle surge also reveals changing dynamics in the cloud computing market. While AWS still holds about 33% market share, Oracle's aggressive growth is forcing all major players to reconsider their strategies. Oracle's approach differs from traditional cloud providers. Instead of offering general-purpose computing, they've specialized in AI-optimized infrastructure with superior database integration. This focus allows them to command premium pricing and attract customers with specific AI requirements. The company's partnerships with major AI firms create a virtuous cycle. As these companies grow, Oracle benefits from increased infrastructure demand. As Oracle scales, they can offer better pricing and capabilities, attracting more AI companies. This strategy has implications beyond Oracle. It suggests that specialization rather than generalization might be the winning approach in cloud infrastructure. Companies that can offer unique capabilities for specific use cases may outperform those trying to be everything to everyone. The wealth transfer also demonstrates how quickly market leadership can change in the technology sector. Musk's decline from $486 billion in December 2024 to $385 billion in September 2025 shows how volatile tech fortunes can be. Placing this event in global context reveals its true significance. The world's billionaires now hold a combined $16.1 trillion in wealth, more than the GDP of every country except the US and China. Ellison's rise to the top of this list represents concentration of wealth at unprecedented levels. This concentration has both positive and negative implications. On the positive side, billionaire investments drive innovation, create jobs, and fund breakthrough technologies. Ellison's wealth enables Oracle to invest billions in AI infrastructure that benefits society broadly. On the negative side, extreme wealth concentration can create market distortions and social instability. When a single day's stock movement can create more wealth than most countries' annual economic output, it raises questions about economic systems and fairness. The speed of modern wealth creation also creates new challenges for policymakers. Traditional economic models struggle to account for the rapid value creation possible in technology companies. This has implications for taxation, regulation, and economic policy. Looking ahead, several factors will determine whether Ellison can maintain his position as the world's richest person. Oracle must execute on its aggressive growth projections while fending off intense competition from larger, more established cloud providers. The AI infrastructure market will likely see significant innovation and competition over the next few years. New technologies, changing customer preferences, and potential economic downturns could all impact Oracle's growth trajectory. Geopolitical factors also matter. As AI becomes increasingly important for national security, governments may intervene in cloud infrastructure markets. Trade policies, data sovereignty requirements, and national security considerations could all affect Oracle's global expansion. The sustainability of current AI spending levels is another key question. While demand appears strong now, economic cycles, technological changes, or shifts in corporate priorities could impact future growth. For Ellison personally, maintaining the top wealth position will require Oracle's continued success. His concentrated ownership creates both opportunity and risk. Future stock movements will have dramatic impacts on his net worth. The story of Larry Ellison's rise to become the richest person in the world is really the story of how artificial intelligence is reshaping the global economy. It's a reminder that the biggest wealth creation opportunities often come from providing the infrastructure that enables other innovations. Whether you're an investor looking for opportunities, an entrepreneur building a business, or someone trying to understand how modern wealth works, the lessons from this historic day are clear. Understand the foundational technologies that drive economic change, recognize the power of concentrated ownership, and prepare for continued volatility in our rapidly evolving economy. Now you have a clearer picture of how Larry Ellison became the richest person in the world overnight and what it means for the future of finance and technology. But I want to know what you think. Leave a comment below with your biggest question or takeaway from this analysis. And if you're ready for more insights into how modern wealth really works, check out this video next where we analyze the top investment strategies of billionaires. Subscribe to join the conversation and keep building your financial sense. This is Smart Money Sense. See you in the comments.